Hey guys, welcome back to our channel. I'm Kenya with BK Trading Academy, and today I have an update on KiSS 2.0 intraday and scalping strategy. This is an amazing market structure and price action strategy that we teach here in the academy to our students. You'll also see that we've been teaching this strategy for years, so been super consistent. It turns amazing results, and if it fits your personality and your trading style, I highly recommend that you master it. So today I am going to show you some examples of a live trade setup we're in right now. I actually dropped an idea in our Telegram. So if you're not in our Telegram, go check that out in the description of the video because I do drop free trade ideas in there from time to time. I'll let you know when a KiSS setup is occurring. And in our academy, I will guide you on stop loss entry targets and things like that. And we teach this every single day pretty much. And if you have questions, you can always message or drop that directly in our private Discord. So there's a few more things I'm going to share with you. We do have an optional 65-page training manual. Let me show you that really quickly, and you can go and access it on our website. So you simply would go to bktradingacademy.com. You can click on products, or the link to our site is in the description below. This is where you have that 65-page training manual. We have tons of testimonials around it, and it's very detailed of what you need to know if you want to really master this strategy. Now, it comes with examples on risk management because that is our #1 priority here at BK Trading Academy. So you will learn how to manage your risk. And I do have some updates as to how I manage my stops. So I'm going to go over that with you. But we're going to go ahead and hop in. If you are not in our free Telegram, make sure you join that. As I said, I do drop trade ideas there from time to time. I'm going to go ahead and move forward and show you an example of a live trade setup. And I'm also going to show you how to identify a trade and give you some direction on stop loss and where you would drop your stops and just give you some tips. So I recommend that you pause the video, rewind it if you need to, comment below when you have questions. Let me know your aha moments if you're new to this. Whatever it is, just let me know and I'll be happy to help as much as I can. So let's go ahead and hop right in. So we're looking at GBP NZD right now. We are in this particular trade. Our initial entry on this pair was at 92.25. So actually right about where the price is right now. So if I move this up, this is where our initial entry was. And the reason why is because on the lower time frame, we saw that it was rejecting in this area that was previous resistance and also support. And we thought that the market would take off, but we knew that it could come back and retest this low here. So we had a backup plan to re-enter there. Let's go ahead and start from the top, and then we're going to work our way down. And I'm going to show you why we traded this pair overall. So let's take a look at the daily time frame. Now, one of the things you're going to notice here on the daily, I have quite a few alerts on here. So if you hear them while I'm doing this video, I apologize. But on this daily time frame, you'll see that the price is now in an uptrend. We recently finally broke out. Before that, you can see the price action has been a little bit funky on the daily. So not too attractive. Basically, it's kind of been up and down, not really trending up or down aggressively. And so if we look at the weekly, now you can see more of what I'm talking about. So we had back in 2022, we had this nice sell-off, and then we had a retracement giving us a nice bearish flag. We had a breakout. We then retested at the bottom of the flag, and then we pushed back up. Okay, we pushed back up to almost retest this high here at 2.0485 or so, but we didn't quite get there. We rejected, moved to the downside, and now you can see we've been kind of moving to the downside and seeing what did this pair want to do. Did it want to continue to push lower or higher? And now you can see we actually went higher, and notice where the price is right now. So we're in February of 2023, and this is where the market started to rejecting after pushing up, which was also a previous weekly structure that was really important, where the market came here, created a cluster of resistance. It was also support in the past and provided a rejection to the upside and also the downside. So considering that, I think we actually caught the short with our academy, and now we're looking for the opportunity to go long. So look how much this pair has dropped right now. Okay, so going to the daily, let's just look at what the pair has done. So over the past 2 days, notice that from this resistance, we're going to move this out a little bit. So notice this area here, right? This is a reversal zone, previous structure. So notice how it was very strong support in the past. This was back in October of 2022. The market provided a rejection to the upside. And now here we are again in February of 2023, and the market gave us a strong rejection to the downside. But look how many pips we have rejected to the downside. So overall, we've pushed about 476 pips to the downside. So tell me this. Do you think that this market is going to turn around and go up now? Absolutely. It's not just going to keep dropping another 400 pips, okay? Maybe if something unexpected and high impact news were to happen, but that's not going to likely happen. We're going to start to see this move, and look where it's moving from, okay? So notice we have this nice sell off to the downside, and it's moving into a previous area of structure that was broken. So notice how we tested here as resistance multiple times. We broke through it, came back, broke below it, broke higher, came back, and now we tested again right here. And now look where we're retesting again. So after you see any type of pair move aggressively like this over hundreds of pips and it moves into a structure area, for example, look how this pair pushed to the upside, and notice how it paused. Now we have an imbalance between buyers and sellers. Selling pressure is going to come in, right? Because no one's going to keep buying this high. So look where the market provided a rejection to the upside in the past. And so now that support is now becoming our future resistance here in the future. Okay. So those are little tips and things that we can see just by analyzing technically. And then important, we need to make sure that we're always checking fundamentals and not trading in the middle of those very high impact reports like NFP or CPI or FOMC. Those are really important reports that we want to watch for. And of course, that's going to depend on which pair you're trading. This is GBP NZD. So I'm discussing more USD reports, but whatever you are trading, you want to make sure that you're looking to see, okay, is GBP, are they making interest rates decisions soon? What reports are coming out that are going to impact my outcomes of this trade? So you want to make sure you're looking at that. So when we saw the price moving into this zone, one of the things I like to do is use my 50-period moving average for confluence. So this tells me that, you know what, the prices have been making higher highs and higher lows. Now we did dip down quite a bit to have a deep retracement, but now we're retracing back into our previous structure. Prices above the 50-period moving average. So I'm just going to remove that because I like a nice clean chart. And here is my trend right here. Okay. So here's my trend. I'm not going to put it right there because it could come down a little bit within the zone. So when I'm looking at my entry, I'm always looking at, okay, one of the things that I see here is that earlier, the price was dropping about right here, okay? So notice right here, this is still a wick rejective area. It was resistance, and it was resistance in the past. And previously, just a few days ago, it held as support and rejected to the upside. Now it came back, and on the lower time frame, we saw some minor rejection, but the price actually continued to dip. So because this is a reversal zone, the price has already dropped over 400 pips. I knew that bounce was going to come within this zone. So this is why I have this zone drawn to tell myself that, okay, this is where I want to see some type of rejective bounce from this area, from this support zone, future support that was previous resistance. And then what I'm going to do is align my KiSS indicators to match it. Okay. So you don't have to do this. This is not mandatory where you have to use every single KiSS indicator. I'm just showing you guys what has worked well for me over the years, and I've turned amazing profit with this strategy. Now, when I see it, I trade it. When I don't see it, there's other options and ways that I trade, and you will do the same as you grow. So this is our zone now that price is rejecting and bouncing off of, and I'm pretty confident that we can gain some amazing pips from this. So now this is going to be our support zone. So this is our support. And if you are intraday trading, you're going to be paying most of your attention to the 4-hour or 8-hour intraday time frame. If you are scalping, you can jump down to the 1 hour, or you can leave your daily chart up and just pull up your indicators. So something like this. So remember, the very first things that you want to do is you always want to know, what is your trending direction on the daily? Are you in an uptrend or are you in a downtrend? Because if we buy or sell on the lower time frame, we want to know if we are in a counter trend trade. But based on this, we see that the market has been making higher highs and higher lows. We pushed even higher than this previous high. We have a high here, we had a low, and now we have a higher high. And now the market has broke, now a little bit below our previous low, but we're still, I would say, consider still in an uptrend or trying to push up. And so I'm confident in buying from this level. If I pop my 50-period moving average on here as confluence, as long as I know that we're in a reversal zone, prices above the 50-period moving average, that's confluence. And I'm also seeing higher highs and higher lows, but a deep retracement, I feel pretty confident to buy. So now what I'm going to do is, after we have confirmed that, so we have our trend direction, we have our level that we want to trade from, right? So trend, level. Now we are going to hop down to the lower time frame and we're going to find our signal. So if we were preparing for this before the price was here, we simply would have put an alert either at this level or where we felt the price could come to. We would wait for the price to get there, and then what we want to do is add our KiSS confluence. So now you'll see here is my KiSS confluence. Now you can see I'm going to pull up the 5-minute. So here's our 5-minute time frame. This is the first one that we want to refer to. So when price gets to the level, we're pretty much looking for our confluence confirmations for when the price may turn around, right? So notice here what we want to see is a Bollinger Band confirmation. Now the settings for the Bollinger Band, RSI, and Stochastic and MACD are in the training manual. They're also there in previous videos. If you go to the KiSS 2.0 playlist, there is a video there that shows you how to set up the KiSS indicators. So go and check that out, or I'll link it above. Okay, so looking at our 5-minute, this is the confirmation I believe we saw this morning at about 92.08, or we might have been right about here at 92.21. Yeah. So I think 92.21 or so, this was our initial confirmation here. And this is usually what you want to see. Something like this, where you have a nice Bollinger Band confirmation. The candle is piercing through the band. You want to see that your RSI is near the 20 or 30 level. Your stochastic is dropping below 30 or the 20 level and getting ready to cross up for a buy. And then your MACD is the last one to come together. You are not getting into the trade when the MACD is fully crossed, because remember, indicators lag. We're just using this for confluence. And the thing is, you're training your eye to see what it needs to see. When you see that price is at a major structure level, you're going to see some type of KiSS setup that aligns with it. And that's what you want to see. So notice how the price started to go up off of this 5-minute time frame. The price went up within 20 minutes about, let me just move this down. So within 20 minutes, the price went up about 30 pips and then it dropped, right? Normally it will drop, it will retest, but notice the price kept dropping. So it dropped a little bit below, it then went up, and then over time it came down quite a bit. Okay, now this is over probably, a few minutes or so, but I'm going to move to the 15-minute now, and I'm going to show you exactly what happened. So I forgot exactly where we caught this, but I basically want to show you that when you are looking at, possibly where you're going to enter, I want you to be mindful of what's going on with the price action. So for example, let's go ahead and remove these indicators right now. And I want you to see, for example, what happened. What time is it? It's 9 my time. So let's go down to the hour. We're going to go down to the hour chart. And one of the things that I noticed when the price was moving into this area, okay, so we're going to go to about 6 a.m. right here. So this was 6 a.m. Let's do a replay. So we're going to do a replay right here. Okay. So this was when the market was pretty much holding support right here at 1.9232. So I think I gave students a heads up and said, hey, we're looking for a potential buy right off the zone around 92.25 to 35 or so. And we started to get some push off this level. And the reason why I called this trade was because I believe that based on what I was seeing on the daily, the market was going to start pushing up. Also, we've been rejecting off of this 4 hour. So if I go to the 4 hour, we were rejecting right off of this 4 hour. Okay. But I knew that price could go and retest at 1.9179 or 80 down to retest this wick. Now, after falling over 400 pips in 2 days, and I know this is a major reversal area, I know that my opportunity is coming. So I'm just strategically planning for how am I going to come out of this trade profitable even if I'm wrong? How do I want to control my risk? I know I can make great profit. I see that, but how am I going to control my risk if this goes wrong? So looking at this 1 hour, a lot of times I will look for some type of entry confirmations, additional confluence on the lower time frame. And one of my favorite ways to kind of confirm a setup is using patterns. So I love double bottoms, double tops. And what you can see right here is that earlier today, this is what the market was doing. So I thought that this support would possibly hold right within here, and we started pushing below it. So now let's go ahead and play and see exactly what happened. Now, this is the thing. I told our Academy students, hey, I'm setting a limit order right here at 91.84, okay, 91.84, and I believe that we're going to bounce from this level. And what we're going to do is we're going to match this up with our KiSS indicators. We already started out on the daily, and we know that this is a heavy turning point, right? So if we look at our 5 and 15 minute and we look for confluence, we're simply looking for that setup. We're looking for everything to be extremely oversold, starting to point up. And if we go to the 15-minute, look at what the 15-minute did. So we held right here. So we were right about here. So right about here within this area, I would say right here, like 91.20. Okay. So right there. And then the price dipped lower. So this is where we were right there. See? And then the price dipped lower. I already said, hey, be prepared if this happens. So we're not putting our stop loss here. One of the things you don't want to do is you don't want to trade with a tight stop. I used to trade like with an 8 pip stop loss. I don't do that anymore. The reason why I don't do that anymore is because my trades needed more room to breathe. Sometimes that would go well, but I was using much higher lot sizes at that time. And I realized that in order for me to come out profitable, I couldn't trade high lots and use wide stops. Okay. It has to be the opposite way around. So when I realized that one of the things I could do was lower my lot size and spread out my stop loss. And that gave me more advantage when trading, especially with GBP pairs, because they wick so aggressive and can easily go against you. So I had to find ways to really play defense in the market. You'll hear me always say that to students. I like to play defense. I was a collegiate athlete, and I always studied my opponent. I knew what they did well. I knew where they were weak. And that's the same way I study the market constantly. I'm constantly studying the market makers. What do they do well? What about brokers? How do brokers make money? And how am I going to use that knowledge to my leverage to be able to be on the winning side? So that is how we have to trade. But notice here on this 15-minute time frame, we dipped lower, as I told them that we possibly could. And we set a limit order at 91.84. Okay. Now keep in mind, our initial entry was at 92.25 or so. So now look what happened. Let's say you got in this initial entry at 10 cents a pip, but that price dipped lower and now you're negative $2.24 or whatever it might be, right? But let's say you get in down here for another 10 cents. You get in with 2 positions at 10 cents a pip because you want to use your lot size strategically. You could have taken one position off the table already and been in profit. Now your initial entry is positive. You could have closed that position and kept this position running, okay, with a break-even stop loss at some point. So this is pretty much the steps that you want to take when you are going through a setup. You want to make sure that you have a good trending market, or if you see where the market has fallen aggressively or it has risen aggressively and it's in a very strong reversal area, that's a good opportunity in my opinion. So you want to find your trend on the daily time frame. You want to find your level that you're going to trade from. What are your technical levels? Where is price most likely to bounce and provide you an entry reason? And then you want to drop down to your lower time frame like the 5 and 15 minute once the price gets there, and you look for your confluence like this. So this is exactly what you want to see, where you have some type of nice wick rejection piercing through the Bollinger Band. And then you start to see some momentum in the opposite direction. You have a nice RSI that is near the 30 or 20 level, and your stochastic and MACD follows as well. What you're going to notice is that the MACD is the last one to come together, and that's fine. A lot of times I will get into the trade with multiple positions, not too many, maybe with 2 or 3. I let that go when I'm scalping. I like to close the first few positions with about 6 to 10 pips in profit. What you're going to notice a lot of times, the price will rise nicely and then it will roll back to retest near your entry again. And that's where I will put in re-entries. So I will put myself an alert right here at 91. Let's say I want to get back in at like 91.90. I'll set myself an alert saying that the price has rolled back, or I'll just set a limit order and execute again. Okay. So that is an example of a setup that we're in right now. And I wanted to walk you through it to show you why we took it. Now, one other thing I want you to know is that because we are scalping and also intraday trading, what I like to do is I get in with a few positions here. For example, at the bottom, I'll close a few scalps. I'll close anywhere from, guys, seriously, like 10 to 15 scalps on one setup. It's crazy. And once you get your style and you get comfortable, you'll know what your style is, but everyone's going to execute very different. But I've been doing this for years and now I'm very successful at it, and I'm very confident because I'm so good at risk management now. And it's something that I'm very proud of because, guys, I have had a lot of painful moments like many successful traders and a lot of you who are not where you want to be right now. But just know it's part of the process, right? Nothing happens great without some type of sacrifice or risk or failure. It's all about how you get back up and keep going. So now that I have this mastered, I'm truly thankful because I can share this with my family and friends. I can share this with so many of you who are strangers who have become like family to us. So I hope that you will take this, you will master it, and you will just allow it to help you And all you have to do is soak up what I'm saying. Take it step by step. If you are not in the academy, this is not to get you to join our academy, because honestly, we don't even advertise our academy. We don't do ads. We don't do paid ads. We don't do any of that. We know what we're doing, and we know we can help you be successful. All you have to do is take what we're giving you, apply it, stick with it, stick with us, do what we do, and you will turn a profit too. So we do this every single day. We own our time. We're home with our kids, homeschooling. Like we wanted this life, and entrepreneurship has allowed us to do that. So trading, you have got to master this, and I want you to. And this is why I'm really stressing it, because I know you can get there. I hope that you found this helpful. Go ahead and check out the description of this video. You will see a link to our Telegram, even TradingView, where we drop tons of ideas. Learn more about the Academy. Continue to watch our free content. Watch how we lead. And I just want to let you know you're more than welcome with this anytime. Otherwise, thank you so much for watching. We appreciate you all, and I hope you found value in this content.